Money doesn't stop people. Confusion does. So maintain clarity, close with confidence, and when you understand affordability, align with their real life and make decisions simple for your clients, you'll never fear the pricing conversation again. So don't avoid the money talk. Step into it. Where there is no value, there is no price low enough. Today we're talking about money. We're starting to wind down now into the options and solution part of the 5-part selling framework. So I want to start with this truth. Every sale that doesn't close can be traced to one of the 5 real reasons why people don't buy. Let's go through those real quick. Firstly, no trust. They don't believe you, or they don't trust you. Maybe they don't trust themselves. Secondly, no need. They don't see the problem. They don't feel like it's something they need to take care of. Thirdly, no want. They're not emotionally connected to the reason they may have even requested information in the first place. There's a disconnect between when they did it and now, and they no longer feel emotionally connected to that. Fourthly, no urgency. They don't feel the timing is right. They don't feel a priority to take care of it now. And you're not making a compelling case. And lastly, no money. Or at least they think they don't have the money. Now, here's the thing. 80% of the time, that last one, no money, isn't actually about the money at all. When a client says, I want to think about it, what they usually mean is, I'm not sure I can afford this comfortably. They're not saying I can't afford it. They're just saying I want to think about it. But they don't want to say that out loud. You see, money is emotional. It's private. And most people would rather say, I'd like to think about it, than admit to you that they feel financially stretched. And that feeling of being financially stretched often is based on the value that they place on the benefit they see for themselves. I need to remember that life insurance is an emotional sale here. It's not a logical sale, and I want to remind you of that. We also need to remember that people buy what they want, not always what they need. So when we break down this idea of people purchasing things that they want, we have to get to the root cause in our sales approach to help them see and discuss what it is that they really want. So that's why this video today is called The Money Dial, selling and talking about money comfortably and approaching that with a level of confidence. Because your ability to help clients find comfort, value, and clarity in money and the conversations that follow determines how far you go in this business. Here's a bold truth for you. Price is not your problem. Their perceived value is the problem. And if they don't see value, and if they can't connect to the plan, to what matters most, there's no price low enough to make them buy. So today, I'm going to help you do 3 things. Firstly, recognize what's really behind the money objection. Secondly, how to guide clients toward affordability by focusing on value and connect it to their internal need. And lastly, use clarity and empathy to make the buying decision simple and not stressful. All right, let's get into this. First, we're going to dive into the real psychology of the money objection. Money objections don't usually mean clients are broke. They mean they're undecided. You see, people spend money on what they believe in. A final expense client will find $80 for a grandchild's birthday, but they hesitate at $60 for life insurance for thousands of dollars to protect their family. A mortgage protection client might be paying $2,000 a month on a house, but then they flinch at paying $120 a month to actually protect that home so that it's secure for when the tragedy might come that they're no longer there to pay for it so their family can keep the home that they invested in. Why is this? because they haven't yet connected the cost to care. Your job is to make that connection clear. Price only matters when value isn't clear. I'm going to repeat that. Price only matters when value isn't clear. So your presentation should help the client see what's really at stake. That's why we call it the stakes. You got to get in. There's a reason. There's someone they love. There's value that they place, the person they love the most, and the burden they'd carry without protection. This is what's really at stake. The moment you link their payment to their purpose, the number stops feeling like a sacrifice. And perhaps it starts feeling like stewardship, like something they should do to invest in their family. All right, secondly, the hidden meaning behind I want to think about it. We've all heard it. Let's be honest. I want to think about it. This is where most agents panic. This is where most salespeople panic. They feel the energy drop. They start reaching for a calendar, trying to get a second follow-up because you think they really need time to think about it. But here's what's really happening. I want to think about it is rarely a logic problem. Remember, it's an emotional response to a safety problem. It means one of three things. They're uncertain if they can afford it. They're uncertain if it's the right plan for them. Or they're uncertain if they can trust you yet with this plan and if you're the right person to help them. And if we're not careful here, we treat all three of these the same way by backing off. Here's what the pros do instead. They isolate and then they eliminate. So I want you to think about this framework here. Isolate and eliminate. I'm going to give you an example of how I walk through that in a 3-part process to isolate and then eliminate. Mr. Johnson, I totally understand. Most people I talk to want to think about it too. Usually, when many of my other clients have said that, it's just for one of a couple of reasons. Sometimes they don't understand how the program works and they may have had questions and they need it explained again. Is there anything about how the program works that you're unsure of that you would like me to explain again? Now, if I pause here and ask you a couple questions, this becomes a consultative approach here to number one. It's consultative in you're not pushing back against them. You're saying, I understand. And so they may say, yes, I would like it explained again, or no, I think I understand. Then I move to the next one. Sometimes it doesn't really matter to them if they have coverage. And I discover that. And it makes me sad. Now, after you shared with me why you wanted this and how important it was for you to put this in place for your daughter, I'm assuming that putting something in place for her is still really important to you. Is it? Now I'm going back to their emotional connection. And oftentimes they say yes. Well, the only thing that's usually left after that is the question of whether they can really afford the monthly amount. And it's really an affordability issue. Is that more of what you're feeling? And oftentimes they will say yes here because now we've isolated and it's okay to discuss affordability. Well, knowing that's all it is, I want to put your mind at ease and remind you that you get to decide on how much you put in the plan for your daughter. And I suggest that we get you started at setting aside a lower amount for Patricia, for your daughter, so that you can feel good about getting this done. And then once we've had the coverage in place for a while, we can revisit it and possibly add some more. So now we're leading with empathy while also inviting honesty. Does that make sense? And once they say it's really just about the price, you can relax because you've just reached the real objection. You can't fix what you haven't found. And when you're trying to solve problems that they haven't verbalized, it's a pressing on them instead of consulting with them and helping them discover it. So stop fighting shadows. We've got to isolate and then eliminate. And once it's clear, it's about affordability. Now you can help. Are you ready to launch your insurance career? Excel Solutions is your go-to leader in life, accident, and health insurance pre-license training. Their cutting-edge e-learning platform is packed with rich content. Think interactive assessments, engaging videos, and customized learning paths, all tailored to your learning style. Being students ourselves, we've trusted Excel now for years to deliver top-notch training, offering high pass rates. Their streamlined prep review courses and the exam simulator are really your secret weapons to nailing the state exam the very first time. Now, you thought it couldn't get any better. Well, it just did. Life Insurance Academy listeners, you receive an epic 50% discount, reducing the regular course fee from $199 to only $99. So, all you have to do is use partner code LIA at liapodcast.org/Excel. Now, Excel spells XCEL. So don't think about it any longer. Dive headfirst into your insurance career with Excel Solutions' premier pre-licensed training with that exclusive 50% discount just for you. Get the code, get licensed, and excel in your insurance career. Thirdly, let's talk about affordability. And I'll say this, affordability is alignment. It's not discounting. I want you to remember that. At the Life Insurance Academy, we teach agents to lead with affordability, not to apologize for price, but to align with it based on their needs and their monthly income. 2 factors. Here's some examples. So from our virtual final expense script, it sounds something like this. Everyone is different. Some people can afford a lot and others can afford a little. And either way, I want to make sure that what we put in place for you will actually be there when your family needs it most. That single line reframes the entire conversation because you're taking the pressure off and you're saying everyone's different. You're not selling a product. You're actually protecting a promise. And here's the truth. You can't sell something people can't keep. So here's what I say when I sense the price hesitation. I understand completely. What most people want is something they know they can keep, not something that sounds good today but might feel stressful tomorrow. And oftentimes that uncertainty for people pauses them, and basically I hear that I want to think about it. So let's figure out what's comfortable for you so that this is a blessing for your family and certainly not a burden for you. Now that kind of language relaxes people. You've made their finances safe to talk about. And when people feel like it's safe, they open up, they stay open to the conversation, and you oftentimes can proceed. So I had a client named James who was retired. He was living on $1,430 a month on Social Security. And he wanted $20,000 of coverage, but couldn't handle the $80 premium per month. Instead of pushing, I said, James, what really matters most? The amount of coverage or the security for your wife? And he thought about that for a minute. And he said, it's the security, of course. So I commended him on being a good father, on being a good husband. And I said, then let's find something that's guaranteed to stay in place. I'm assuming you would rather have $10,000 that's certain to be there for her than $20,000 that might not. So now we're speaking to his stated need, which was one of security. It was not just a need, but it was a desire. So we lowered the face amount and we wrote the policy for a number that he could afford and was comfortable with. Now, that's not a smaller sale. For some of you, you think by doing that, you're reducing your own opportunity. That's actually a stronger sale because affordability done right builds longevity. It creates persistency for you, the insurance carrier, and the beneficiary, the person your client is trying to protect. And after all, that's why we're doing this. We're not doing it so that 8 months later, they feel like they have to cancel it. We're doing it so they can protect the person they love the most. So let's break down how money conversations differ between final expense clients and mortgage protection clients, for instance. Final expense clients, who are they? Typically 55 plus. They usually live on a fixed income from Social Security or disability. Many of them don't have bank accounts. They use direct express cards sometimes, or even prepaid deposit accounts. Their money, for instance, they don't get it like as a regular paycheck. Their money is deposited in their account typically on the 1st or the 3rd or one of the Wednesdays. That's how Social Security works. You can't talk price until you know how and when they get paid. Do you get your check on the 1st, the 3rd, or one of the Wednesdays, Mr. Smith? This is language that speaks to their understanding their financial situation. And when you say, now, does that go into a checking account or on a direct express card? And about how much is your Social Security each month? This is language and conversation that you need to have, and you need to have it in a direct, non-confrontational way, in a very casual way, in a very expectant way. You're directing it so the client feels like this is normal information that I need to share. You see, those questions are not invasive. They're respectful. They tell the client that you understand their world when you frame it that way. Now, once you know when the money is deposited or when the money lands, you can match the draft date on the application so their payment never becomes a stress point. And this is how we build trust. These plans are set up to be paid once a month through the bank, Mr. Smith, with your Social Security, so you never have to worry about it. They take care of it for you. That's how you build trust, not by lowering the premium, but by anticipating the problem. So now let's talk about mortgage protection clients and how they might differ and how the conversation shifts. Typically, they're between the ages of 30 and 55. Oftentimes, they're dual income households, multiple debts, and constant commitments. Their issue isn't poverty. Their issue isn't a severe fixed income, but it's pressure. It's not poverty, it's pressure. They're asking, can I really fit this in without feeling strapped or maybe even more strapped, right? Young families are dealing with all kinds of things, car issues, kids, preschool, daycare, insurances, lots of things. And now you're talking to them about another payment. So here's the language I use. If something happened to you tomorrow, would your spouse be able to keep your home, the home that you invested in? If one of you lost an income for 6 months, what would you want in place to protect your family? You see, that shifts the conversation away from price to their priority. Key thought here, shift the conversation from price to priority. And when you put their purpose and their priority first, the price is secondary. When people visualize what's at stake, they make decisions based on protection, not on premiums. I hope that session helped there. All right, fourthly, elevating belief. Let's elevate belief. Let's talk about it through stewardship. What do I mean by that? You see, when we guide people to make responsible decisions with what they have, we're helping them exercise faith and foresight. Stewardship, like in God's word, it says, to him who is trusted with little and is faithful with little will be given the trust of great things, right? And so we're talking about stewardship here. Build a connection between creating a legacy and an example for their family and the price of that investment. You see, that's not sales, that's service. It's about significance. So it's not always just about a fixed protection amount, but it's about doing what's right for their family and setting the example. So the next time someone says, I want to think about it, remember, it's not rejection, it's reflection. They're trying to reconcile desire with ability. Help them bridge the gap with clarity, empathy, and stewardship. The stewardship factor is a big one here. Not everybody uses it. I always like to do it because I wanted to commend people on setting an example for their family, on doing what's right, and being responsible for their family. It's really about doing the right thing. Okay. Fifthly, we're going to eliminate confusion. We're going to create an easy off-ramp for people to make a decision. Eliminate confusion. Donald Miller says the guide's job is to make the path clear and the next step easy. Confused people don't buy. If you confuse, you lose. You've heard me say that before, and I stole it from that guy, Donald Miller. So when you've clarified everything, the value, the budget, and the benefit, end with a simple, pressure-free question. If we can find something that's affordable for you and takes care of your family exactly the way you want, I'm assuming that you want to at least apply to see if we can get you covered, right? Now, that's an assumptive question that does 3 things. This was my closing line. It was my big trial close. It was the one that I knew if they said yes here, we were moving forward. So this assumptive question does 3 things. Number 1, it confirms clarity. It brings them back to the reason they stated that they wanted this and why it was important. Number two, it empowers choice. You're making the statement tied to their beneficiary and the value for them, and you're asking them if that's something they still want to do. It empowers choice. And then lastly, it creates an easy off-ramp for them to say yes. Now, if they say there's no reason, they've essentially just given you permission to close. Now, that's not manipulation. That's actually leadership. I want you to understand it that way. You're helping create very clear, concise value points and giving them an easy off-ramp. You've guided them through the fog of all of this. And they've been thinking about this for a long time. Now they can see the road clearly ahead. And remember, you're the guide. It's your job to make it clear, to make it simple, to make it easy. So here's some assignments for you based on this session that we did today. Before your next appointment, I want you to write down some things here. The 3 most common objections you hear, maybe too expensive, maybe I need to think about it, or I'm already covered. And I want you to script 2 empathetic, clarifying questions for each that isolate the real issue. That might take you a little bit, but if you write them down and you begin to practice, you'll be ready. And I want you to practice saying this out loud to yourself. Say it now, actually. Say it with me if you'd like. Where there is no value, there is no price low enough. Where there is no value, there is no price low enough. So our job is to do what? Is to focus on value. Connect the price to their purpose. Connect the price to their priority. And when they see that, this premium actually serves that purpose of their priority. I hope that makes sense. Now, if you live in that truth, you'll stop chasing clients and you'll start leading them. Money doesn't stop people. Confusion does. So maintain clarity, close with confidence, and when you understand affordability, align with their real life and make decisions simple for your clients, you'll never fear the pricing conversation again. So don't avoid the money talk. Step into it. Step into it with confidence and clarity. Because when you help people see the value of what they're actually protecting and you keep the focus on that, there is no price low enough and there is no reason high enough for them to walk away. So I hope this session today helps. Thanks for listening to the Life Insurance Academy podcast. Subscribe on Apple, Spotify, YouTube, and share this episode to another agent who needs to hear this. And we'll see you on the next episode.